Good morning, everybody. This is the live market open for May 31st. It's a Tuesday. It's the last day of the month. I'm Yohay Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. Good morning, everybody. As usual, we'll talk about recent developments in markets, especially after the bank holiday yesterday, various charts and levels, the next 24 hours, which are quite busy, and of course, answer your questions. If you cannot see the chat alongside the screen, please go to the address here, tlk.io/fxstreet-forex-live-video. And today, as in previous days, we'll have a special feature. We'll talk about cable, about the pound. But first, of course, the main events, the main things that are going on in markets. So, for some of you, it's been a long weekend in the UK and the US. Just before the weekend, we had Janet Yellen. I'll remind everybody, she was speaking in an event that was not supposed to be about monetary policy, but she did speak about monetary policy, warming up to rate hikes. That gave a boost to the US dollar, late on Friday and also yesterday, but things have changed a bit, some profit taking, and we might see more profit taking now. Remember, it's the last day of a busy month. This month of May, you know the saying, sell in May and go away. In May, we did have the US dollar strengthening, so now it makes sense to see some weakening. We are seeing it. We did see it a bit yesterday afternoon. We might see it more now. Weakening of the US dollar as profit taking, nothing related to current events in markets. So watch out for that. But the trend, I think, remains positive for the US dollar. Okay. Overnight, we had an opinion poll in the United Kingdom by ORB, published by The Telegraph, one of the most influential newspapers in the UK, leaning to the Conservative Party, but generally in wide circulation. Anyway, this poll showed a tightening. Okay, we had something like more than 13% advantage for the Remain campaign, for Remain, 55 to 42, and now it's only 5%, 51 to 46 so far. No reaction from the pound. Okay, but I believe we'll have more action from that. Good morning, Gamon. Good morning, Luca. Good morning, Fabian. Yesterday's also big event was the Japanese sale tax. More talk about delaying the sales tax. We had a big rise for dollar yen. Actually, a fall of the Japanese yen across the board. At the moment, we're seeing some consolidation, but this is still a very hot topic. And as I mentioned, end-of-month flows, profit-taking in the US dollar, but things could change throughout the day. Before we move to charts, we had a few figures yesterday worth mentioning. No surprises with the year-over-year German CPI. It came out at 0%. That feeds into today's Eurozone CPI. We also had CPI from Spain, no surprises. Canadian current account, also no surprises, 16.8 billion minus has a deficit. Good news from Japan, household spending, probably the equivalent of retail sales, dropped 0.4, but that was better than expected. In Australia, data was confusing, was mixed. Strong building approvals, rising 3%, but a disappointing current account with minus 20 billion. We have much more important figures tonight from Australia. And this morning, a weak German retail sales figure, drop of 0.9. Let's move to the charts and see if we had any impact from that. I don't think so. Anyway, good morning. Also, Sirik. Morning, everybody. Let's move to the charts. Okay. So, we might not exactly. It's hard to attribute this recent fall of euro dollar to the German retail sales. What we did see yesterday is a German, the euro rise from the bottom. Well, it's mostly some weakness of the US dollar. Now we're seeing a resumption of the trend. All in all, this morning, the moves are not huge, only 10 pips to the downside. We talked yesterday a lot about euro dollar. It looks like the trend continues to the downside. 2 steps down, 1 step back up. Okay, I'm looking at low support at 110.70. Recent lines have been a bit choppy. I'm still looking here at 11.30 as at the moment some kind of support, but it's a bit more choppy. Strong resistance 112.50, 113.35, Euro dollar awaits quite a few figures. We'll talk about that very soon. Pound dollar. Okay, we did have a move to the upside yesterday and then erased. This morning we're a bit higher. So perhaps we did have an effect of this ORB poll a few hours ago, but basically erasing the move to the upside we had beforehand. So again, it's hard to attribute it. Remember, there was a bank holiday in the UK yesterday and also in the US. And only now traders across the globe, I mean, the UK, one of the biggest and most important financial centers, are getting back to business. So let's see if we have more moves to the downside. Very strong resistance, 147.70. That was the May 3rd high 4 weeks ago. Okay, we've seen a recent high at 147.40, and 145.80 is for me the next line of support, followed by 144.40. Dollar yen, we made a move. Well, we didn't make it all the way to 112, which was a previous line of resistance, but we did make it to 111.50. Maybe it's a line worth adding here, although we already have too many lines. Anyway, 110.40, maybe 110.60 would be relevant here as support. Anyway, dollar yen, after dipping under 111, went back to this level. Okay, so relatively stable over here. I think we'll have more news from Japan later this morning, political news regarding the sale tax, but basically they don't want to raise the tax. That's good for stocks. What's good for stocks is bad for the Japanese yen. And this is, in general, we're at the highest levels since that big disappointment at the end of April. So we did see dollar yen move higher. Dollar CAD, relatively stable as well. I don't think it'll last for too long because I do believe that oil prices will be on the move. So 130.45 at the moment, in this range between 130 and 130.80. 129.10 is further support, low support 127.50, high resistance 131.70. Aussie dollar, here we are seeing a big move to the upside ahead of this big night. We'll talk about that soon. 72.33 is the current level. We did sort of hit resistance here at 72.50. Which was previously in line of support and a line of resistance, off the lows, off support at 71.75, further resistance at the round 73 number. So it's quite a significant move in the Aussie. One of the reasons is higher expectations for the GDP figure. We'll talk about that soon. Kiwi dollar, as in many cases, getting carried away with the Australian dollar, but not following the full move. We're seeing this on the to the upside and to the downside. So currently, some 20-something pips to the upside. We didn't reach that low of 66.70, back above 67, battling with the 67.20 line, which supported the pair. High resistance at 68.40. Dollar Swiss, very much in range, 99.23, 98.50, and 98 service support. The line of parity as resistance, but we haven't been there in quite some time. Euro Swiss continuing its sort of grind to the downside after the big moves up. We didn't reach the 112 level. Interesting to see that 112 is an interesting level on both dollar yen and dollar Swiss. Anyway, 110.44 at the moment. 110 is some kind of support. Very limited movements here. And if we have limited movements on major pairs, the movements are even more limited on this specific cross. Euro pound currently hugging the 76 level, 76.40, very strong resistance, followed by also strong resistance at 77.40. Support somewhere over there at 75.80, and then the round number of 75. I believe we'll see this cross euro pound trade more in tandem. Why is that? Because if the UK leaves the EU, it's also the EU being left out by the UK. It's bad news for both, and if they stay together, it's good for both. So I believe we'll have more limited movements here, but in the past few weeks we had sort of the pound gaining a lot of ground thanks to better opinion polls. let's see if we have now a move to the upside. That means stronger euro, weaker pound on this worse than expected pull. I mean, for the Remain campaign, of course. Okay. Question here by Luca. Canadian GDP today is the March figure. That's right. So it won't include the impact of wildfires. No, I don't think it will include the impact of wildfires. No, we'll talk about that soon. Anyway, it sort of provides a conclusion for the first quarter. And we'll have also the quarterly figure and the year-over-year figure and things like that. Anyway, let's complete the roundup of currency pairs. Euro yen 123.75 at the moment. We had a big move to the upside, of course, rising from that 122.35 point, which it touched beforehand when the range was narrow. Of course, the big driver here is the yen. Resistance 124.20. This weakness of the yen related to the sales tax hike, to the lack of the sales tax hike in Japan is the biggest mover. Anyway, 123.70 is the current level. Pound yen continuing its journey north, 163.80. Actually, very nice technical behavior here. Look what a nice double top. Last time we've been here was in mid-March. Now another move towards this line. Next resistance, if 163.80 is broken, is 166, the round number. 162.50, weak support, I would say 160, strong support, followed by 158. So pound against the yen, the dragon, the gepi, we're seeing here very nice technical behavior. Okay, and last but not least, the price of oil. We know it has an impact on other currencies, on other financial instruments. Stronger oil means stronger oil is perceived as higher demand, good for global growth, risk on. 49.50 is the current level. We had a move above the round 50 level late last week on Friday, but we're not going anywhere fast. Also here, the range is limited. I believe that all the limited ranges we've talked about so far this morning, that things will change quite quickly today. The UK is back, the US is back, and it's the end of the month. Always some movement. Yeah, Luca's mentioning the OPEC meeting with freeze agreement in sight can be a sell the rumor than buy the fact, as has been the case in Doha. As far as I know, expectations are very low. Also, markets are hardly talking about this, okay? So I don't think we'll have anything coming out of these OPEC meetings. We had a big event in Doha on April 17th, that's 6 weeks ago, special meeting, OPEC and non-OPEC members. The expectations then were very high for some kind of production freeze, not cut, but at least freeze. Even that move that was brokered at the time by the Qataris, and we had the Saudis and the Russians seemingly close to an agreement, it broke up without any kind of agreement, without a joint statement, anything. The Iranians want to pump out more oil. The Saudis want to break the Iranians. The Russians, maybe they can talk about cutting, but they've reached peak production. These are the main countries, but also countries outside the more competitive countries. The US, they want to make money. So does Canada. So does Norway. At the moment, oil prices are at much higher levels than we've seen beforehand. We were around Doha, around 40, 35, now around 50. I don't see any chance. I mean, never say never, but at these kind of oil prices, there's really no pressure at all to make any kind of bold decision. So, I mean, Nigeria is not producing at its peak. They want to get back to peak production. No, I don't see anything coming out of this meeting. If we have some kind of declaration about a production freeze, it could boost oil prices, but I think this will turn into a non-event. I mean, it is, of course, an important event and, I mean, worth watching. My expectations are very low. Okay. If we have, a non-event, I believe, which is mostly priced in, maybe we'll see oil prices dropping a bit, but again, OPEC is a bit irrelevant at the moment. Okay, let's go to the events for today, which are quite busy. Luca mentioned the Canadian GDP, and yeah, we have many more events. So we have German unemployment change at 5 minutes to 8 GMT. That's just after the show ends. Okay, the employment situation in Germany is very positive. We're seeing almost every month a drop in the number of the unemployed in Germany, which is, of course, good news. So last month we had a drop of 16,000. This is the fresh figure for May. And a drop of 5,000 in the ranks of the unemployed is expected. This is mostly important politically. Better the employment situation, the less, motivation that Merkel has to act. But anyway, it's been a constant trend. The unemployment rate in Germany is only 6.2, much better than over 20% here in Spain, for example. Anyway, no change is expected in the unemployment rate, and 5K drop is expected. If we have a rise in unemployment, it could be negative for the euro. This is, of course, key figure employment coming out from the most important country. 5 minutes later, we have the unemployment rate in Italy, and that's a different story. A level of 11.4 was seen last time, and we don't have expectations, but I guess it's expected to remain more or less the same. Also at 8 GMT, 10 here in the old continent, we have monetary data from the ECB. European Central Bank gave its best efforts to boost lending, okay? And to push up inflation. So private loans went around a year ago, they were negative, they were squeezing. Net loans, now they're rising 1.6%. Nothing too exciting, but it's still in positive ground. And M3 money supply, the level of money in circulation, that's expected to remain unchanged year over year at a growth rate of 5%, which is not too bad, okay? Of course, the ECB would like to see more private loans. That's the whole idea of looser monetary policy. Lower interest rates are supposed to push banks to lend more money out. The problem is who to lend to and the leveraging. Well, that's a very, very long story. Anyway, these are the figures around just after the show. But the more important figures are released at 9 GMT, 10 in the UK, 11 here, Central European time. Unemployment rate expected to remain unchanged at 10.2% in the Eurozone, much higher than Germany's. The good thing is that it was already above 12%, so it's falling down quite gradually. But more importantly, for the ECB's decision is the preliminary release of inflation figures for the month of May. No big surprises are expected because Germany and Spain did not provide big surprises. Anyway, we're expecting still headline deflation. Instead of a drop of 0.2, a drop of 0.1 in prices. A big headache for the ECB. They can blame it on oil prices, but also core inflation stood on only 0.7, now expected to rise to 0.8. Also, this is far below the 2% or below target of the ECB. So the expectations haven't shifted because Germany and Spain were as expected, but I would not be surprised to see, we sometimes have surprises to the upside or to the downside. If we have core inflation rising back to 1%, it'll be encouraging for the euro, for the ECB. If we have it remain at 0.7, it'll be more worrying. Core inflation, headline inflation, again, they can still blame it on oil prices, but that's officially their target, okay, 2% or below on headline inflation, okay? I see a few comments. Before we move on to other events, will the Iraqi forces hunting ISIS have any effect on oil? I don't think so, because as far as I know, Iraqi forces are hunting ISIS in Fallujah, which is not an oil-producing country, perhaps an important country, an important city, not an important region for oil. It is an important region strategically. It's on the road to Jordan and to Syria in Iraq, but The biggest oil production comes from the north and the south of Iraq. The south is quite secure. The north is a bit more messy, but it's not where the battles are on now, okay? Of course, we can always have other kinds of disruptions. I mean, bombings in other places that do produce oil, but I don't see anything. Anyway, at the moment, I don't see any changes in production. Sorry. Fabian says, how a better employment in Germany will move euro? More employed equals more inflation and weaker euro. Better employment means better inflation and less need for the ECB to act. That means a higher euro. Again, it doesn't have an immediate implication. But if things get worse in Germany, as far as I see it, yeah, but as long as the employment situation in Germany is positive, and it is, there is less pressure on Angela Merkel and Wolfgang Schäuble to provide more fiscal stimulus or to give more backing to the ECB in its monetary action. That means, and if things get worse in Germany, they'll have sort of more incentive to act by themselves and to encourage others, the ECB, to act, okay? So that's better jobs, stronger euro, worse jobs, worse euro. I mean, it's quite straightforward. Again, it's not the most important figure because the ECB is the biggest game in town. The ECB works according to inflation, officially. Also other things, so yeah. Hope that answered the question. Anyway, let's continue. We also have GDP from Italy, the third largest economy. They had a longer recession than many other countries. Now, a growth rate of 0.3 is expected quarter-over-quarter and 1% year-over-year. Shouldn't have too much of an impact. And then at 12:30 GMT, lots of figures from the United States. I focus on one specific indicator, and that's the core personal consumption expenditure price index year-over-year, or the core PC. Why is that important, that mouthful? That's because it's important for the Fed. That's the Fed's favorite inflation figure, not a headline CPI, not core CPI, but this specific measure of core inflation. Last time it stood on 1.6. We don't have expectations for it now. For me, this is one of the key figures for the Fed in June when it says data dependent, and it has two mandates, inflation and employment. This is the key figure. A rise in this figure raises the chances for a June hike and should strengthen the dollar. And if it falls the other way around, at the same time, we also have personal spending and personal savings, okay? Personal spending and income and expenses, okay? Of course, for a more significant move, we would like to see all figures move in the same direction, more spending and more income, or for a stronger dollar, or less spending and less income for a weaker dollar. Of course, these figures don't always move in tandem. Sometimes we have more income and less spending. That means people are saving more, or the other way around, okay? These are the important figures at 2:30 GMT in the United States. Of course, then we have Canadian GDP. For the month of March, a small drop of 0.1 is expected. It's a monthly release, okay? The same as in February. We're expecting the same for March. And annualized quarter over quarter, we're still expecting a strong growth rate because the first months, January and February, the Canadian dollar was weak. Canadian economy grew quite strongly. So we're expecting an annualized gain. Again, it's comparable to US figures of 2.9, much better than 0.8 in the US, okay? We had 0.8 in Q4 in Canada, okay? Before we move to more indicators and our busy calendar, I see we have a few questions here. Lucas says, oil seasonals point to strength during driving season in late August. Indeed. Think OPEC may give a pullback to 46. Or should we be looking to buy? Yeah, we've seen the same things last year. Oil is, of course, very seasonal. Americans love their cars and love driving, so yeah, maybe we'll have a pullback and then another move to the upside. Last year we reached $62, $63 in WTI crude oil. We might see prices moving a bit up. Again, I see when prices go up, I believe we'll see more production. When we see more production, we have less. We have lower oil prices. So far, it hasn't happened. Okay. Thanks, Luca, for the great chart. Lower oil and strong dollar can give us that push to 133, 135 in dollar CAD. Yeah, the Canadian dollar has shown a lot of weakness. Now with wildfires and relatively stronger Canadian dollar, things are not so good for Canada. I mean, the trend is not that positive as it used to be. So yeah, we might see a move towards higher levels in dollar CAD. That's 133.10 for me, level I'm looking at. Okay, so thanks for that. Let's continue with other events we have today. Quite a busy calendar, last day of the month, and things are going to be busy also tomorrow through the week. At 1 p.m. GMT, we have the S&P Case-Shiller House Price Index. Prices of homes in the United States are growing at an okay pace. Last time it was 5.4 year over year. Now we're expecting 5.2. And we have the Chicago PMI, sort of an early indicator for the manufacturing sector. Not that important. It used to be more important in the past. Anyway, we're expecting a small rise from 50.4 to 50.9. Still a very limited growth. 50 points is the level that separates growth from contraction. Okay. Perhaps more importantly, at 4 GMT, we have the CB consumer confidence. That's the Conference Board figure, not to be confused by the University of Michigan one. That's for the month of May. A rise is expected here, similar to the one we've seen in the University of Michigan's figure from 94.2 to 96. In theory, stronger consumer confidence means more retail sales, more spending, and stronger US economy. This isn't always the case. These figures are not always correlated, but it certainly has an impact on markets. Okay, and now let's move into the night. I mean, that's already on tomorrow's agenda. A very busy night for Australia. If you're awake at night, and I know many day traders trade at night, work at day, trade at night. So at 1 GMT, we have non-manufacturing PMI. Well, and also the manufacturing PMI. These figures are from the Chinese government at 1 GMT. So they're taken with a big grain of salt. A small drop from 50.1 to 50 is expected on the manufacturing PMI. Manufacturing is more important for Australia because more manufacturing means more consumption of metals, which Australia exports to China. Then we have a more important figure is the Australian GDP. Quarter over quarter, we're expecting a stronger rise of 0.8 after 0.6, and a year over year small drop, so it might be a bit contradicting, but these are the expectations. So 2.8 after 3%. Of course, this is the bottom line figure for the economy in Australia, contrary to the United States or to the UK. It's one release, one final release, and that's it. No revisions, nothing. Meaning the next release for the next quarter will have maybe a revision of Q1, and now we'll have a revision of Q4, but we don't have second and third release. Anyway, very important night for the Aussie. And last but not least, we have the independent Chinese manufacturing PMI from Caixin. I hope I'm pronouncing that correctly. Contrary to the government figure, the independent one shows a contraction, lack of growth in the manufacturing sector, and more of the same is expected. A small dip from 49.4 to 49.3 is expected. Again, as always, all figures need to go in the same direction. I mean, a strong gain in the Australian output with an improving Chinese economy will give a big boost to the Aussie dollar. And if things go the other way, weak growth and worries about China, this should push things against the Aussie dollar. Things can be, of course, things can be contradicting. Anyway, it's all this data is released in a short period of time, and then we have markets have time to digest everything. Okay, so that was the big sort of the long coverage of the calendar for today, which is extremely busy. Also, remember, we have end of month fixings, the London fix, the end of month movements. My tendency is to see a weaker US dollar because we had a stronger US dollar throughout the month of May, but some adjustments have already been made. And of course, traders are thinking also about the next move. So it's going to be a mix between end of month flows, a return from the holidays, which is always messy, a long weekend, and of course the data that we're going to have today. Lower oil and strong dollar. Okay, we already commented yeah, about that. So I thought it's a new comment. Okay, let's have another look at the charts before we move to our special segment for today, and then of course the wrap up. Of course, more questions are always welcome. So euro dollar, well, is at the same place it was just before the beginning of the show. The pound perhaps showing a bit more weakness. This ORB poll was not good for the Remain campaign. Okay. Here is the Financial Times Brexit poll tracker. I must say that many other newspapers in the United Kingdom have these trackers. That did not include the latest poll. It showed 46% stay, 41% leave. Let's refresh it, see if we have any updates. No updates, but watch this space, as they say. Okay. Yeah. And if we'd already talked about the pound, another comment here before we move on. Dollar CAD out of its wedge, now developing possibly upward channel. Oh, sorry for that noise. Upwards channel. Okay, let's share the chart with everybody. So thanks, Luca, for that. Yeah, nice channel here on pound dollar. After we had a breaking above uptrend resistance, now moving up in a very relatively narrow range, right? And your targets here are, sorry, that's dollar CAD, if I said anything else. Yeah, okay, so 133, 133.60 and 161. Okay, that's the Fibonacci levels, right? 38.2, 50 and 61.8. Yeah, I'm looking more at just the technical, I mean the highs and lows. So yeah. Oh, there's a confluence here in the first level. Yeah, okay, so that's an interesting chart of dollar CAD. Let's see if things continue this way. Okay, so thanks, Luca, for sharing it with everybody. Now let's go to the special feature for today. I want to talk, yesterday we talked about euro dollar quite a lot. I don't have as much to say about the pound, but that's the feature for today. Cable, pound dollar, sterling. Sort of one of the key figures, this is our special feature for today, one of the original sort of currency pairs called cable. It was called cable, still called cable, because it was a cable telegraph between the United Kingdom and the United States, and prices were quoted over there. Some people call it the devil's currency because it's treacherous. It moves, it has wild moves. And next point here is indeed sharper movements in comparison to euro dollar. Sometimes we're seeing, I mean, euro dollar trade in a more limited range and pound dollar trade in a wider range. We need always bigger wider stop loss points, wider take profit figures for making for trading this currency pair. What I mentioned it all in many cases in the show. We have a special behavior around news releases I don't know who has access or who doesn't, but UK releases are made at 8:30 GMT now with this, or 9:30 in the UK, and towards the release we always see some kind of movements, some kind of rumors or leaks. Always looks suspicious, and in many cases we have a buy the rumor, sell the fact behavior. Okay, we have pound moving higher on expectations, rumors, or even leaks. Someone has the inside data. I don't really know it, but we are seeing such big movements, and that the pound is moving higher on expectations that will have more important, stronger than expected data. And then when the stronger than expected, good news does come out, we have buy the rumor, sell the fact, pound weakening. Sometimes when the data is so spectacular, we have an extension of the moves, but usually the movements before the publications are bigger than the movements afterwards. The same thing, of course, goes for when things go the other way around. When we're seeing the pound fall in the 20 to 30 minutes before that 9:30 UK time release, and then the figure is indeed worse than expected. Sometimes we have an extension. That extension is not as strong as the movement before the release, and sometimes it's just by the rumor, sell the fact. That means pound dollar is actually moving up despite a weak figure. But the flip side of that is that in many cases we have really significant moves, these erratic, chaotic moves around the release, 20 to 30 minutes before, 20 to 30 minutes after, and then things are ignored, no long-term impact, okay? Even if it's an important figure like services PMI, GDP, retail sales, a big movement around the event, and then it's sort of back to normal, okay? It's another reason perhaps for calling it the devil's currency. What's going on in cable recently? Recently, the biggest mover is politics, the should I stay or should I go? The Brexit debate, 22 days to go. No, 24, sorry. Anyway, this is clearly the big event. It has a bigger impact than the data. At the moment, and I believe at the event as well, nothing is fully priced in. We'll have a big reaction in any case, okay? I think that now chances are still for Remain, for the UK to stay in, and if we'll see that happening, I still see the pound going up even more. I don't see a buy the rumor, sell the fact, because it's such a monumental event. I think it'll be quite significant. Okay, but if we see, of course, a Brexit, the impact will be much bigger because it's even less priced in. So we'll see a collapse of 1,500 pips, I believe, in a matter of a few days. I don't think I'm exaggerating a lot. I'm not the only one that thinks that way, but it's a huge, huge event. Pound cable, I believe, will collapse a lot, but also the euro might fall quite a bit against other currencies, such as the dollar and the yen. Anyway, this is the special feature about cable, about the pound. See your question, comment. A lot of the cable market is traded by the big five, the UK clearing banks, and lots of allegations of their dealing desks ganging up to push cable. For all intents and purposes, a sort of FX cartel in cable market. Yeah, I don't have pure evidence of that, but London is the biggest financial center for Forex, at least. Of course, there's lots of competition for from New York, but there's, and there were, of course, allegations in the past, at least, for some kind of fixings in the foreign exchange market, fixings in LIBOR. So this ganging up you're mentioning is certainly makes sense. Okay, so that's it for a special segment about the British pound, about cables more specifically. Yeah, let's see more questions, comments, and then move to the wrap-up for today. Yeah, good info. I agree, Siri. And yeah, if we talked about the pound, let's look at the 146.33. 146.50, some kind of resistance, support at 145.80. Question here by FXN. What are the Forex session opening and closing times GMT for London session and New York session? Well, depending on who you ask, but for now, I mean, it's 8 GMT 7 GMT. 8 in London when London opens, okay? That's 9 here in the old continent. It closes around 4 p.m. UK time, 5 in the old continent, okay? New York session around, that would be 12 GMT, and then it closes with the close of the US stock market, and that would be 10 my time, so it would be 8 p.m. GMT, okay? But you'll see movements going on before and after, of course, as well. It's not sort of a sudden halt. It's a slowdown, okay? It's not that markets are sort of fully closed. I mean, a big fall in liquidity. It's sort of more gradual, okay? Comment here from Ed. Germany is thinking of time zone change to match London so that Frankfurt might overtake London for markets trading in. London's market is more corrupt than Germany's. I don't see Germany. Yeah, I don't know about that news, but I only know that here in Spain there is an idea to go back to the London time. Portugal has already moved back to London, and that's how it was in the beginning of the 20th century. But changes in time zones are not that frequent. Okay. Okay. Let's do the wrap up for today. So this is the wrap up for the live market open for May 31st. End of month flows are set to dominate this Tuesday morning. But beforehand, let's talk about what we had so far. Yellen has pushed up the dollar on Friday, and her words still echo. Latest Brexit poll shows a tightening according to ORB, the Telegraph. So far, no big movements from the pound, but I believe it will have an impact. Of course, more polls are always coming through. The Japanese sales tax over the weekend, more talk about that. A delay in the sales tax hike, bad for the yen, good for dollar yen. And as I mentioned, end of month flows might be unfavorable for the dollar that did gain a lot in the month of May. Yesterday's figures did not rock the boat too much. This morning's figures, German retail sales missed with 0.9. But today it's quite a busy day. Just after the show, in a few minutes' time, we have German unemployment change. Another drop in unemployment is expected. Good news could support the euro. More importantly, at 9 GMT, Eurozone figures, somewhat a small improvement is expected in Eurozone inflation. Could put more color on the cheeks of Mario Draghi, but we can always have surprises there. Of course, we have the ECB meeting later this week. For those trading the Canadian dollar, we have the monthly GDP, and in this case, it's the month of March, so it's also the quarterly GDP, perhaps more important. We're expecting a weak March, but a generally stronger Q1, okay? Let's see how it moves the Canadian dollar. Of course, oil is also important. At the same time, 12:30 GMT, core PC price index from the United States. I know it's a mouthful, but it's the Fed's favorite inflation figure, and for me, a key figure for the June decision. Okay, the third in line, and we have 3 more to go after this one. At the same time, also personal spending, personal income. Of course, if figures all go in the same direction, it'll have a more meaningful impact on the dollar. At 2 GMT, CB consumer confidence, also an important release. In theory, impacts spending. We're expecting a small improvement here. And at night, a busy night for Australia. In a matter of minutes, we have Australian GDP at 1:30 GMT, and then the Caixin manufacturing PMI from China, an independent indicator about China's manufacturing sector, the most important one. Let's cover a few charts. Euro dollar, well, this morning we are seeing minor strength for the US dollar after yesterday's light weakness. 111.33 is the current level of support, strong support at 110.70, resistance at 112.50, strong resistance. The pound, to which we've dedicated a special segment today, currently 146.25, support 145.80, resistance, high resistance at 147.70. Dollar yen maintaining its gains above 111. 111.50 is resistance, 110.50 is support. Dollar CAD within the range, very stable at 130 to 130.80. The Australian dollar, contrary to many other currencies, we did have an upside move here. Reached resistance at 72.50, high resistance 73, 71.75, and 71.40 are support. And the Kiwi dollar also raising its head, 67.15 at the moment, high resistance 68.40, low support 66.70. Okay, that's the wrap up for today. I believe we'll have lots of action. So far, this is a slow wake up. I guess you UK traders, European traders in general, are not moving that fast. We have a few more questions before we go. So King Dollar has already tested its broken TL with few trend line with few people on the boat. COT data. Let's share it with everybody. This chart by Luca. Yeah, that's the FXCM dollar index, right? Not the DXY, the classic one. So we did break the long-term trend line here. I believe we still have more room to the upside. Higher chances of rate hike in July. All right. Yeah, and as you mentioned, the market is not heavily positioned in favor of the dollar. So short squeezes are not on the cards. Risk remains to the upside. Yeah, I agree. But we'll have to have positive figures today from the United States. And we'll have to have the mess clearing up after the end of month flows. Okay. Yeah, so anyway, that's it for today. Thank you very much, everybody, for coming, for the great questions. I wish everybody a safe and successful day in markets. I hope we'll have more volatility than in the past 24 hours. And that's it. So that's it. And see you tomorrow. Thank you and bye-bye.